what are you making of? So he hasn't budged. There was hope against hope that ahead of the April 9th deadline, there may be some concession, a pause, room for negotiation from the United States. That hasn't happened. How does this now play out in your view?
Hey, good morning, Tamana. It's always great to join you. And I think the uncertainty continues. The market hope was that after April 2nd, or Liberation Day as it's been dubbed, was that we would have a little bit more certainty with respect to kind of what the top line might be that we're working with, and then start the process of negotiations. But the quick institution of tariffs, not leaving any time for negotiations, and the reciprocity with respect to China and tit for tat tariffs and the risk that poses, that's really what's unnerving the market right now. And so it's a reminder to investors, and I've been telling my clients proactively since last week, that there's going to be a lot of ups and downs through all of this, because there's going to be a lot of hope that maybe there's a light at the end of the tunnel, and then that gets pulled away. And I think we've kind of seen little bits of that already. And so it's important not to rush into the market or buy the dips, to wait until we get a little bit more clarity with respect to where policy is ultimately going to go. And in my opinion, the only way all of this goes away is through Trump. Trump is the only one who holds the cards to say where we're going to go. And until he blinks, I don't think there's a sustainable path for at least the US equity market to continue to move higher. It's not to say certain specific stocks cannot do well. There's absolutely places that investors can hide. I think India is definitely one of those places where that can be a ballast to some of this uncertainty. But investors should remain defensive right now and really lean into quality and think about balance in their overall portfolio, fixed income, equities, making sure that you're not aggressively getting risk on too early.
India could be a safe space to hide. How so? And what would global investors need to see tangibly to underlie what we've been talking about, that India could be better placed?
Yeah, I think that more investors are seeing this. It's interesting. In conversations with clients I had over the past week, India has come up quite a lot with respect to Modi having a good relationship with Trump, the fact that the overall GDP is very insulated from the US overall. It's a strategic geopolitical partner with respect to China, which seems to be, there's a reason why they're caught up in the most extreme tariff situation, because there is a very important geopolitical aspect to China as well. India helps counter that. But the story to India is not only about GDP insulation, good demographics, it's also the fact that the Indian markets have already had a painful correction. They already had a 15+% pullback on the index level and sharper in the mid and small cap space. And when you look at a lot of the larger companies, the banks in particular, communication services, discretionary, outside of the information technology space, there are a lot of companies that are fairly insulated from the impact of tariffs overall. Cheaper oil benefits India. So there's a lot of reasons to look at India as a very attractive ballast to a lot of the challenges that we're seeing. And hopefully that gets foreign investor flows to finally start moving back sustainably. And I think that can create a market rally. So India is one of the few markets around the world where I would be looking to put money to work on dips in high quality companies where I do expect earnings to really start to move higher going forward, irrespective of the tariff situation.